Well, when it comes to investing, it's been said that today's hot shots are tomorrow's turkeys. Assets in the ARK Innovation ETF peaked at $28 billion in 2021 and now hover around a humble $6 billion. That's a reverse 4X, and a lot of people are beginning to question Cathie Wood's money management skills. What's going on, Cathie? Today's ETF battles an audience-requested bout between ARKK and ticker symbol VGT from Vanguard. So who wins the battle? Stick around for the answer. Welcome to ETF Battles. I'm Ron DeLegge, and we're in Season 5. This is where we huddle to analyze audience-requested battle matchups of ETFs versus each other. And the purpose here is to help you make informed investment decisions. So if there's an ETF battle that you'd like to see, send me your ETF tickers in the comments section below or on our X feed at ETF Guide. Don't forget to visit the description section below. I've got links to our program judges. Get in touch. Plus, we got a link to our program sponsor, Direction. And finally, we've got viewer resources with download links to free audiobooks and ebooks and other goodies, so don't miss it. To me, the perennial argument for and against active management versus passive is comparable to other perennial arguments like Democrats versus Republicans and Star Trek versus Star Wars and Yankees versus Red Sox and hamburgers versus pizza. Shall I continue? Annoyingly, all sides are kind of right, but sometimes they're both kind of wrong too. And a lot depends on the historical time frame that we're talking about. Today's ETF bout was requested by a viewer named The Smart Lawyer. We could use some of those. And it's a duel between VGT from Vanguard and ARKK from ARK Invest. Now, The Smart Lawyer is intent on, quote, exposing the so-called genius of Cathie Wood. That's his mission. And to the benchmark cherry pickers, as a side note, who argue that it's unfair to compare ARKK against VGT, it should be the S&P 500 or some other convenient choice. Well, who cares what they think? So for this battle, we've got the Smart Lawyer, we've got two judges, smart judges, and a court of law. Somebody get me a hammer. Where's my damn hammer? Judging today's contest, we've got Athanasios with Bloomberg Intelligence and Mike Akins with ETF Action. Judges, welcome back to the program.
It's great to be here, Ron.
Yeah, nice to see you guys.
So our four battle categories are cost, exposure, strategy, performance, and mystery. For mystery, that's the category where our judges surprise us with any factor or thing that they feel is crucial to today's contest. Our judges can also nominate wildcard ETFs if they feel there's a better choice elsewhere, or they can opt for split decisions. I've got the scorekeeping chores, and at the end of the show, we will declare an overall winner. Now, keep in mind, none of the battle outcomes that we ever do on this program are predetermined or known in advance by myself or our judges. Let's kick things off with the first category, cost. Athan, please get us started.
I don't know if there's maybe been a matchup that's been further apart than this. You have Vanguard, 10 basis points, and you have on the other extreme, the ARK fund, 75. Now, I get it, it's about what you're paying for and kind of the exposure, but this one is a pretty simple one. 10 basis points for VGT, that's a pretty good deal. So I'm gonna go with that one.
Thank you, Athan. Mike, you're up next. How do you see it when it comes to cost?
I have nothing to add on the cost point. It's pretty much a no-brainer and obvious for anybody that looks at those two expense ratios. I will note that on the other side of cost, which is your trading expenses inside of an ETF, both of these funds are ultra liquid. So there's pretty much a toss up on that front. So from who wins this category, it goes to VGT because they both have great liquidity and VGT is 65 basis points cheaper than ARK.
That takes us to exposure strategy. Mike, you're still up, so break it down for us.
I don't even know where to begin, Ron. A lot of times you'll say we're comparing apples to oranges, right? And I think in this battle, you really just got to say you're comparing apples to sizzling hot fajitas because that's how different these two strategies are. They both have a tech foundation, but VGT is truly a technology ETF. It only owns companies inside of the S&P, MSCI, GICS sectors. So that's purely a technology fund, whereas ARK is going to be utilizing our derived analytics is actually sector diversified. It's got techie names, but those tech names are from all over different industries, whether it be industrials or materials or healthcare. So it's very diversified in the context of the sector concentration. The other side of this equation is just looking at market capitalization. VGT is a market cap weighted product, so it's going to own your biggest market cap names. A great way to think about that comparison is VGT has 50% overlap with QQQ, right? So they're both market cap weight products. QQQ's overweight technology. So if you own VGT and QQQ, you own 50% overlap. A lot of the same names and literally 50% common weight of those underlying holdings, whereas ARK has less than 1% overlap with either. So just a very, very different strategy. So let's then break down what does it mean more from an exposure perspective. With ARK, you're going to get more mid-cap, small-cap names. It's highly concentrated, high conviction. It is an active strategy. So to that end, you are betting as much on Cathie Wood and her team's ability to pick stocks as you are on any methodology. VGT is a straight allocation play. It's a perfect example of how ETFs got their start. They're an asset allocation tool. I like technology. I want a low-cost way to make a broad-based trade on that sector without having to pick individual names. You unwrap all of that, and it is really hard for me to give you a winner because they are that different. I think it comes down to preference. VGT, great asset allocation tool, ultra cheap. It will get you quick access to the largest technology names across the US. ARK, you're making a call 100% on the ability of that team to make those decisions. I'm a traditionalist. I like to make my own asset allocation calls. So I'm going to give the win to VGT. I want to be in control of that asset allocation versus somebody else. But for the next person, it might be completely opposite. My winner is VGT.
Great breakdown. Thank you, Mike. Athan, you're next. How do you see it?
Yeah, all really great points. When ARK sort of took off a couple of years ago, it basically invented a new category, right? Sort of innovation ETFs. That wasn't really a thing. So to Mike's point, it is very sort of tech focused, but you get some pretty nice sector diversification. I like ARK's role as a complement to the core, and I think that's what people have to when you're looking at it. If you own VGT and you already own the S&P 500, it's a lot of the same names, right? You're kind of really doubling up on the big cap tech names. So I like ARK's role as a portfolio diversifier. It's got almost very little overlap with any big benchmark. We'll talk about the performance, which is a definitely very different story. It's no secret that Cathie's picks have not been great over the last year or so. But purely as a role in a portfolio, I like ARK just because of what it means and sort of what it means for other ETFs is looking for something that's very high concentrated, low active share, complement to a core versus VGT, which is, I think most people already have that sort of exposure built in somewhere. So just for that, I'm gonna give the differentiation and exposure to ARK for this category.
Thank you, Athan. That takes us next to performance. And this is where it really gets interesting. So, Athan, you're still up. How do these two ETFs compare?
How you manage to be down in a year like this year, I don't know, honestly, right? When the market is pretty much hitting all-time highs, feels like every week, and ARK is down 14% this year. I just don't know how that happens. And let's say if ARK was an index, right? I know it's active, like Mike was saying. If there's something it correlates the most to, it's sort of unprofitable tech names, right? And you sort of think about where we are, and if things have been going well and the market's been going up and unprofitable tech has not been doing well, I can't imagine if the outlook is not as rosy for the economy, how do you think they're going to be doing better in an environment that hasn't been helping, right? So the performance is, I don't know if I've ever seen an ETF sort of rise as fast as it has and sort of collapse as quickly as it has. And it's undeniable how well large cap tech has been, right? The Apples, the Nvidias, the Microsofts. So the performance, I think it's not even close. ARK is pretty much underperforming every big strategy this year. But performance, I think, is a pretty clear winner here for VGT.
Mike, you're up next. How do you see it when it comes to performance?
With the caveat that I don't think it's a fair comparison. We don't even categorize these two ETFs the same. I doubt that Bloomberg does either. We have ARK classified as multi-sector thematic, whereas we have VGT classified as technology. So very, very different products, but yeah, there's no comparison in any time frame. Whether I look at 1 month out to 5 years, you have VGT destroying ARK on all these categories. But these things can reverse quickly. Had we been doing this debate 3 years ago, those numbers would be very, very different. And ARK was on fire. So if you believe in that, I think Athan did a great job of talking about unprofitable tech, because right now that's what the portfolio is. I just did a quick analysis on our portfolio stock visualizer, and I can share this with you guys. But if you look at a heat map of net income, positive versus of the 34 names currently in ARK, over 60% of them have negative net income on the trailing 12-month period. So they are truly, a speculative investment that you believe is going to pay huge, 10x returns in the future. But right now they're burning through cash, and this is a tough environment. So on a backward-looking basis, obviously no-brainer VGT wins. In the current environment, look, I'm a startup. I understand the funding environment we're in, and it's going to be that much tougher for multi-billion-dollar companies to get funded when they're burning through cash. It's a tough environment with these rising with the higher interest rates. Quality companies are getting rewarded right now. Don't see that reversing in the near term. So even on a kind of a look forward basis, I'm giving the nod to VGT in this current environment.
That takes us next to our mystery battle category. This is where our judges can give us that single factor or maybe multiple factors to make their arguments. So Mike, what is your mystery battle category, and which of these two ETFs wins it?
So my mystery category today is active versus passive, right? We always like to have that debate, the active versus passive debate, and there's no two clearer examples to talk about that when you're looking at these two ETFs. We're seeing a huge rise in the number of ETFs launching that are actively managed, very different than the ARK actively managed, but all the same, we're seeing it come. And I think it's very healthy for the space, but I think people need to understand that trade-off. Are you investing for somebody to manage your money, a portfolio manager to manage a space and set it, forget it, let them do their thing? They will adjust to the environments. Or are you managing your money to get access in a very efficient vehicle such as an ETF based on your market assumptions, right? And if you're doing it based on your market assumptions, your client needs, your risk profiles, your return profiles, then you should be sticking to passive and making those assumptions. If you would like to more set it and forget it and allow the manager to make those changes, then you should be looking at active. And I think it's a really good example today. There is no winner in my mystery category. That's a complete personal choice, what you want to achieve out of your investment style. But I think it's a great way to highlight today. So I just give it a toss up on my mystery battle, but the idea being understanding the difference between active and passive.
Athan, you're up next. How do you see it when it comes to your mystery battle category? What is it, and which of these two ETFs wins it?
I always like to kind of focus on taxes and the implication that what sort of on Mike's point, active versus passive has on capital gain distributions. And ARK is very, very high turnover. They trade a lot. It's got something like 85% turnover in the fund. And given that it's also very concentrated, it kind of does open the door potentially that it could pay out capital gains, right? It's just harder positions to manage if they can't wash that out. And it's paid out for several years in a row. When it was up, it's paid out capital gains. VGT, it's indexed, it's Vanguard is very, very low turnover. So just something to keep in mind. ARK, in really good years with strong gains, it could likely pay out a capital gain distribution. So the advantage will go to VGT just because it's low turnover, but it's just something to be aware of in these very sort of high churning active funds.
We've moved to the part of the program where our judges can give us their overall battle winner. So how will this go down? Athan, give us your overall winner.
Yeah, it's a tough one. I like what ARK represented from a product perspective and what they did for opening the door for other types of high active share type ETFs. But I think Mike had nailed it. Sort of like going forward, it just seems like some of the best years are behind this fund. And I think with the current environment, just large cap tech makes more sense. I'm going to bring in a wild card. If there's one that I do like, an alternative to ARK, a little bit afraid of the overconcentration in the large caps. Look at small cap tech, which is PSCT. It's the Invesco small cap tech ETF. It's not going to quite be as small as some of the ARK names, but it's just a way you can think about if you looking for maybe some other potential winners outside of large cap tech. That one could be an interesting one to look at. But overall, I think VGT is going to get the nod for this one.
Mike, your final chance to weigh in with your overall winner. Give it to us.
Well, going back to the start where I talk about comparing apples to sizzling hot fajitas, with that in the understanding here, I do not think this is a fair matchup per se. I have to give the winner to VGT for a handful of reasons. One, it aligns more to my original belief in the best usage of the ETF market, which is asset allocation and a tax efficient, very efficient wrapper. But I like what Anton says, ARK, I do like the highly concentrated. I love thematic ETFs. I think thematic ETFs represent a very, very powerful way to expand your portfolio into allocations you wouldn't otherwise do in a very tactical way. So it's not to poo-poo on thematic as much as it's to say, given these two products, given the current macro environment we're in, I just think VGT is a better trade. But if I was going to be completely honest, I wouldn't be allocating to either one right now. I think big tech's a little overvalued, and I think ARK is in a tough position with their high growth names, speculative names that aren't making income. I'm not making any suggestions, buy this, don't buy that. But from this straight up battle perspective, VGT is my overall winner.
Well, our judges have spoken, and according to my battle scorecard, today's winner is VGT, and our judges brought it strong, made some great points. ARKK, of course, as they pointed out, leans towards those smaller caps, and it is a highly concentrated portfolio, actively managed, and it's very different from VGT. This was like Mike said, apples and hot fajita comparison, not even in the same zip code. And Athan making the point that maybe the way to invest in ARKK, if you're going to use it, is as a non-core supplement to your core portfolio. But again, ARKK has definitely struggled in terms of performance and higher interest rates, and all of those profitless companies in the portfolio have really been hurt by that. Another interesting point was the overlap. More than 50% overlap VGT to QQQ, and certainly large cap tech has dominated. And so I don't know if we need more of that inside our portfolios. Just making a side point. Athan also mentioning his wildcard choice, which is certainly worth checking out. Was that ticker PSCT? Was that correct, Athan? Yep. So PSCT, put that on your radar. Great job, judges, to helping us break down today's ETF battle. We couldn't have done it without you.
Yeah, thanks for having me.
Awesome. Thanks for having us.
Key takeaways. Today's hot shots are tomorrow's turkeys. A big thanks to the smart lawyer for this episode's ETF battle suggestion. If you have a good matchup in mind that you'd like to see, send me your ticker symbols in the comment section below or on our X feed at ETF Guide. What did you think about what our judges had to say? Has Cathie Wood's run completely over? Can she rebound? Can she make a comeback? Let us know in the comment section below. I'm Ron DeLegge. Thanks for watching ETF Battles. We'll see you on the next show.